Let's talk about markets, and Deven Choksey is with us to help us with that. Deven, good morning. Great to have you with us here. Thanks very much. So GST meeting, is it? How are you thinking about this, Deven? Will it keep stocks bid, especially in areas like autos, etc., or you think for most areas it's going to be a little bit of, buy the rumor and sell the news?
Yeah, Prashant, good morning. Well, I think the market has already started factoring the GST-related impact, particularly on the high GST items, high GST rate items. Factoring that, I think this is coming down, which is in a way good because I think the market is definitely forward-looking on this subject. Auto insulin, which you mentioned, I think definitely remains the best part of this entire rate reduction program, which will happen. In my viewpoint, I think the sluggish demand scenario, particularly in the passenger vehicle segment, could possibly see the lift if we see the rates coming down. And I think those rates which are on the premium products, if it is coming down, then it is even better. We believe that I think market has partly factored this particular news and momentum, which might quite possible that after the announcement, I think the market price would start correcting for some of the stocks. But on the whole, if you look at the earning opportunity that one is getting out of the business, I think these companies are likely to show relatively steadier to better performance, not only in the current financial year where I think the amount of demand scenario is emerging, but also in subsequent period in next 3 to 5 years. So one remains cautiously optimistic about the possibilities going forward with the rate reduction happening. It will be only a boost coming in some of these companies.
Okay. So all the consumer stocks, auto stocks, all of them on our radar. Good morning, Deven. Good to have you in. Every time I order something on one of these quick commerce apps, I realize that the fee ends up inching a little higher and higher. Now we have confirmation, right? Zomato has increased the platform fee from 10 rupees to 12 rupees. Swiggy is already, I think, at a higher point. And the stocks have been doing extremely well. What's your view on both Swiggy, Zomato? Do you like either or both or neither?
Yeah, Sylvia, good morning. Well, I think I believe in consuming more than buying for investment in stock at this point of time. Largely more, but because of the fact that the valuation-wise, I think these companies have already reached to a scale. And certainly, I think if they keep on increasing the fees by 10-20% every now and then, it means that the profit performance would probably happen faster for these companies, which they have not seen in the previous years, I think, since they have listed also. In my viewpoint, I think that is justified. But at the same time, I think everything is in price today. We are not getting this business cheap. And at the same time, I think we are seeing that quick commerce, Reliance is entering into quick commerce. I believe that I think this is one company which one will have to be mindful because I think wherever they have operated, in whichever space they have operated, they have reached number one by disrupting the markets. And I think that's where probably the larger amount of threat would be to the existing players. So we'll have to wait and see, particularly more because the valuations are expensive. I think one would like to wait and see.
Okay, all right. Deven, I'm not sure whether you've seen this. The TBO Tech, they've gone ahead and they've done this acquisition for around $125 million. And just back of the envelope calculation suggests that their revenues could go up by approximately 50% in comparison to the base year and EBITDA by around a third. Valuations as well look pretty okay. Any view on this? The acquired entity, margins are around 10%. They do around 17%. But otherwise, in the entire scheme of things, it looks like it's accretive. Any view?
No, Nigel, I think I haven't seen this thing in detail, so could probably comment it later.
Okay, all right. What about JSW Cement? They came out their numbers. The numbers are backdated because, they're still giving numbers for Q1. But we know that the group actually has created wealth. If you look at the steel assets, even the power assets as well. So the parentage is good. The valuations are expensive. But they have said that in the time to come, they'll scale up profitability as well as size. Your view at around $150?
Yeah, I think we are convinced about the scenario per se in the commodity in cement. That is something which we understand well. My take is that I think whenever the companies put in more money in the expansion of capacity or even for that matter inorganic growth, I believe that I think the investors don't earn enough in those kind of situations. Maybe in a temporary momentum, you might see the price rise in the stock. But ultimately, I think till the time they absorb the entire capex program, the investors don't make enough amount of money. So in such situation, when the valuations remain expensive compared to peers, I think one will have to be a little bit more watchful at this point of time. I believe that I think there is a scope for upside of 10 to 20% in most of the cement stocks. And maybe I think if the price firms up a little bit more, the tailwind could be a little bit more as well. But around 20% kind of an upside can't be ruled out in most of the cement stocks as we see it today.
Okay. Deven, thank you very much for joining us. A quick conversation. Appreciate you joining us here on the channel as